What if I told you that one small, icy country with a population smaller than New York City effectively owns 1.5% of every single listed company on Earth? That includes the manufacturer of the phone in your hand right now, the car you drive, and the platform you're watching this on. This isn't a conspiracy theory. It is the reality of Norway's government pension fund Global. With over $1.6 trillion in assets, it is the world's largest sovereign wealth fund. But to look at this strictly as a bank account is a mistake. We need to analyze this as the ultimate masterclass in brand longevity and strategic dominance.
The story begins in 1969 with the discovery of massive oil reserves. Most nations in this position fall victim to the resource curse, spending lavishly, inflating the currency, and destroying other industries. Norway did something radical. They chose restraint. They decided that the oil revenue didn't belong to the politicians of today, but to the citizens of tomorrow. They established a brand identity built on patience rather than impulse. This is the same principle that separates fleeting viral startups from legacy corporations. It was a conscious decision to separate the volatility of oil prices from the stability of the nation's economy. Functionally, the fund is a diversified investment vehicle that pours oil profits into stocks, bonds, and real estate globally. But look at the growth chart. It defies gravity. This aggressive accumulation mirrors the cash-hoarding strategies of tech giants like Apple or Alphabet. Just as Apple sits on a massive war chest to weather any storm or acquire any competitor, Norway has built a financial fortress that makes them immune to global market crashes. They don't panic sell. They buy when everyone else is bleeding. This is the business lesson. Liquidity is not just safety, it is power. Here is where the branding genius truly shines. The fund operates with strict ethical guidelines. They refuse to invest in companies involved in tobacco, certain weapons, or severe environmental damage. Critics might call this woke capitalism, but business strategists call it risk management. By avoiding companies with high regulatory risks or bad public reputations, they insulate their portfolio from future lawsuits and bans. They are effectively curating a premium brand of investing. It sends a signal to the market. If Norway isn't buying your stock, maybe your business model is flawed.
Let's draw a direct parallel to the corporate world. Think of Norway's fund as the Apple of sovereign wealth. Apple doesn't chase every low-margin trend. They focus on high-quality ecosystem integration and long-term user retention. Similarly, Norway focuses on intergenerational wealth retention. They are not day trading, are betting on the entire world winning, which is the safest bet in history. Most CEOs struggle to think past the next quarterly earnings report. The managers of the Norwegian fund are thinking in 100-year cycles. This is the concept of intergenerational equity. It challenges the very nature of modern capitalism, which prioritizes short-term gains over long-term stability. If you want your business to survive for a century, you cannot extract every dollar of value today. You must leave chips on the table. You must reinvest. Norway's discipline proves that the longest game is also the most profitable one. Perhaps the most surprising element is their radical transparency. You can go online right now and see every single investment they hold, down to the last krone. In a world of dark money and offshore accounts, Norway chose to open the books. This builds immense brand trust. In marketing, trust is the ultimate currency. Because the citizens know exactly where the money is, there is social cohesion rather than unrest. Transparency isn't a vulnerability. It's a marketing tool that solidifies their legitimacy on the global stage. So, what is the lesson for your business? You don't need oil reserves to think like Norway. Build cash reserves to weather the storms. Define your ethical boundaries to avoid toxic risks. And most importantly, stop obsessing over the next quarter and start planning for the next generation. In a world of fast money, the patient capital always wins. Norway's $1.6 trillion secret isn't about luck. It's about the discipline to say no to today so you can own tomorrow.